The idea behind the business cycle is that there are certain repeating patterns in the economy as it recovers from a recession, as it expands, as it then eventually tumbles into the next recession. And so it's a useful concept and can help us predict the future. And the current business cycle has been racing forward at an unprecedented rate over the last 2.5 years. In fact, at the current pace, it looks like it could wrap up the cycle after a total of 3 years from the start of the pandemic. And just to make a point of contrast, the prior couple business cycles lasted the better part of a decade. So the cycle has been moving very quickly. We're already getting end of cycle readings now, just 2.5 years into this cycle. Examples of end of cycle indications are, for instance, that inventory levels have begun to surge again, that consumer confidence has fallen quite sharply, wage growth, which has been fast, is starting to hook a little bit lower. All of that is, again, consistent with end of cycle. And as the name would suggest, end of cycle normally happens just before a recession. And so this business cycle work that we're doing really adds credibility to the view that a recession is more likely than not. At a minimum, a period of significantly subdued economic activity seems to be coming based on our reading of the business cycle.